August 18th is already Friday. The main theme of this week is that the delisting channel has been short for 30 minutes. Today's concept has not changed. First of all, we have to look at the 30-minute death position today, which has arrived very quickly. This pattern is very likely to be legitimate, and the channel itself is becoming more and more legitimate to fall. That is to say, the intensity of the decline has not been very big in this channel. It just feels like taking one step back and taking half a step back. Or there are more returns here and more returns here. So in terms of trading, many people are actually doing long orders. But when a friend was communicating with me last night, he was talking about the fact that I have a long order here. Then he said that he also went to trade today to participate in a long order. He has the basis of wave analysis. So he draws his own waves and analyzes them himself. Then if there is an opportunity, in fact, many of our technical theories and opportunities are resonant. We all analyze a pattern based on the K-line and then frequently trade. So in the technical field, all technical analysis is actually pretty much the same, and they all have many resonance points. Including long and short, but we also have a place. We need to understand its position. When he communicated with me at that time, this is not here. Yesterday, for example, when it rose to here, the channel was not opened. Then when the second main section rises, the channel has already been formed and opened, and the upward space has been opened, and it is not a relatively stable channel. Then it is the 618 position and the trendline position that he backtested, so the trendline is slightly below 618. I happen to be doing a single split of 2 followed by the first split point. The split point is usually 618 plus the trendline. This is relatively easy to use. Just place an order. People are indeed not robots. We often trade and place orders. For example, last night's decline. I was just talking about it in the teaching article yesterday. I was waiting for the one that fell, waiting for the one that fell. Then I waited all night and what time it was. Anyway, it was quite late. I forgot the time. I always had other things on my hands. I went too busy with other things. When I came back, I saw that he had broken the position. But he has no intention of rebounding, so I didn't do anything here. Our trading technique is oriented to actual combat. All the trading points for me and for everyone are real. So that means if we can't do it, we can't do it. If we can do it, we can do it. If we can seize the trading opportunity, we will participate. If we can't, it doesn't matter. Like here, it is actually an opportunity to go long. But at this position, we are close to the 30-minute descending channel. Therefore, this range will appear relatively small. If it goes according to my idea, we should participate as little as possible. If there are more orders and he backtests this car, we can participate if he can't stand it. Then back to the friend I just talked about last night, he also communicated with me. In theory, I tell everyone, that is, it is best not to keep me private during technical exchanges. If I keep technical exchanges private, I really feel that chatting about the party system is very one-sided. It just happened that last night, there happened to be an opportunity. Then while he was chatting, I also chatted with him and thought about what your chances were. In fact, 2 friends came to me at the same time last night, so they also said at that time. When a friend was at this position, he said that 5 minutes has already been too much. We can do more, right? Then I said that I have already entered the market here. Then this position first means that we'd better not worry about it, because this position has already faced the 5-minute lower trendline position yesterday, and then the 30-minute trendline is also close, and it is also close to this position, so it is recommended not to place an order. Because at this time we are waiting for the seat to be short, and we are almost approaching my checkpoint. Yesterday it was also at 1900. I have already checked an order, and the last order is a guaranteed water. There is nothing I can do about this, so just a guaranteed water. Actually, it can be done. If the rebound is normal, you can actually close the two orders and the long position. The main thing is that I also have a small wish in my heart, that is, it may break through, so I am still waiting. Because we see this 30 minutes, it is the main area that has fallen a lot, right? 123, and then here is actually a legitimate decline, and a very valid main area has not been generated. So in mine it is just like what my friend said. He is here. He said that he has made a lot of achievements recently. Then I said that you are the best. And he entered the search at this time last night. I said that you can probably know by looking at your entry that you will lose your position. Because, for example, if you are entering the market at this position, then he is really going to fall, right? Then, for example, if he uploads here, you look at him and think he is going to break through, and you place a long order in advance. It has not formed an valid 30-minute upward channel. It is equivalent to saying that you have to do it in advance. Although you want many friends, our technical analysis is really not difficult. Technical analysis is in my impression. I have experienced it before when I first started to become a novice. It was just the first month or two, and I was a very novice. In fact, I didn't understand anything, right? Then I read Xiao Mafei's book on technical analysis of futures markets. Then I finished reading the book after a month, half a month to a month, and it didn't take that long. Anyway, I feel it's pretty fast. I'll apply it while watching. As long as you understand the K-line and the bands, you can basically analyze the market. But during the analysis process, you will find a problem. This is something I have experienced myself. There is a problem, which means that your level is indeed unclear. You see, there is a lot here, yes, but in our analysis, we have always told everyone that the upward trend is a rebound pair, and the rebound is close to the trendline position. We need to check or close the position. Then look at the position of the trendline. If you check, see if the position of the trendline can stand up. Then you will naturally make a profit in the magnetic position, but you can also wait for it normally. It is our rule to trade the subsequent multi-bounce, which is a rebound. For example, after this point is completed, we will wait for it to break through and form a new one. It will no longer be done with multiple bombs. Point and timing are both important. Your point determines your level. Did you get it in the low position? You are not easily stopped, are you? Do you make a profit? At a high level, you are always at the center of the whirlpool. For example, yesterday, your friend entered here. It may be his second transaction today, or his first time. He also said that he also entered at this position during the day, and also entered and checked before. Because this technology is universal, everyone can draw the 5-minute trend by himself. But when he drew the line, he said that after seeing my indicator, it was indeed very resonant. That is to say, the cost of drawing lines can be saved, right? This really saves a lot of things. And this is also the core level of my own trading. But it can be used by anyone. That is to say, you can use. We simply use this multi-cycle to clarify our position, and then you have to enter the market. Just like today is a repeat of yesterday anyway, so repeat it. This sentence is the 3-minute channel decline. Then on the channel, look at the traffic conditions, K-line conditions, and band conditions to go short. Then if you are here, for example, stand on this expulsion line, I will break through the expulsion line. If a line breaks through the expulsion line, you can go short. You should understand that you don't have to be afraid that it breaks through too quickly. You won't have a chance later. In fact, there are many opportunities. You just don't follow the market all the time. You just follow the market. If you deal with each situation in your mind, you will accumulate more and more, so you can keep following the market and keep familiarizing yourself with the review. Especially the multi-cycle review is not a single cycle review. Single cycle review is useless. I don't think it's useful. I think as a person who has just started to come into contact with the wave theory, as long as you have physical properties, you can understand the wave theory. Some people may say that I have never been able to talk about waves. This means that you have no connection with the wave theory. There are no physical properties in this aspect, and if there are physical properties, if I say it myself, when I learn waves, it really only takes half a month and a few days. It doesn't mean how long it takes. You only need to read the wave theory from beginning to end, and you will know at a glance how this wave is drawn, and it is a channel. For example, if you look at other channels and the technical analysis of drawing channels, my channel is also quite special. It is not a simple channel. Anyway, it was updated after hitting a new high. The theory is the same. So about what the channel is about, you can quickly understand it and become familiar with it. The same goes for placing an order. If you place an order today or yesterday, when the decline is proportional to the decline, these 5 minutes are relatively simple. And of course, if we see that this position can be there in the morning, it is actually possible. Please intervene. You can intervene. I can call it up for everyone to take a look. Because this drop, you see, it does not have any break. It is the break that is the legacy of its decline. Then there are only ratios. There are only 2 ratios. In fact, it can be 3 ratios or it can be calculated. But the indicator is just 2 ratios, so it is relatively simple and relatively fast, and it is decentralized faster. In this form, it will be backtested here. You can see that the distance of its backtest is a bit far. The backtest has reached 50 to 618, which is now reached. Now it has been reached, so there is still a trading opportunity here. As for the short-term opportunity, I will press the market. I don't really want to trade now. I feel that the recent rhythm is at 12 o'clock, around 12 o'clock in the evening, so the profits of day trading are actually very small. You can only play as you like. If you can play, set a direct loss and play. If you don't want to play, you don't have to play. Because this round trip, for example, its round trip earnings, the round trip risk is still relatively high. There is a risk of direct loss, and there is a risk of low profits. We all pay more attention to profits. For example, yesterday we only reduced our position for $6. I think $6 is too low. In fact, it is too low. I just have a small seed. Thinking about this seed, it also has hope of breakthrough. Then this is actual combat. Actual combat is that we face various choices, selective, various levels of trading selectivity. Then in trading, we must follow the 1 minute. 1 minute. If I were bolder here, I could go short. But the direct loss is too big, which is not in line with my trading habits. I just didn't disclose it. Then let's talk about this here. When I talk about this main section, the main section is just one section, which is also called a wave, so this channel is relatively narrow. Going down, this channel breaks back. It means that this period has ended. It basically depends on the position of 50 to 618. So now I have seen it. I have seen this range. Let's take a look. This range is still okay. It fell quite sharply yesterday. Yesterday, the price also dropped by $20. Yesterday, because I went to bed at night, I didn't care about him. I also read the market firsthand in the morning, and then shared it with everyone, communicated with you, and also made a decision for myself. A plan for today, so don't look at what I'm talking about now. In fact, I'm just improvising, that is, looking at the board, and telling you directly. Sometimes my words are quite divergent, so I hope you can give me a shout out. Anyway, this is also my plan, and it is also a process for me to figure out the market. You can share it with everyone, and then make a plan for yourself for today. Then here we can actually go. For example, if it looks very similar here, we can trade. It has a breakthrough and a very similar process. This is a straight channel. Or there is a channel with a straighter data trend, which goes up on one line. There is this kind of channel, which means you go up on one line, but it does not conform to the previous trend channel. This everyone needs to understand. First of all, it has a structure in the big trend channel. For example, let's just stretch one line here. This is the extended fishing of 5 waves. The extended fishing of 5 waves. If it decays, it can be shorted. This is what I have in front of. For example, CPI data, such as Phylon data. Then phi-long data, not phi-long data, is the bottom of the ruler. As for the CPI data, the CPI data is a 5-wave rebound. Then with the help of the extension data, it blocks a very long extension. When the extension decays, we will eat back the extension, and when it rebounds, we can go short. Just like what we are doing is comparison, the difference is relatively small. You can trade it in 1 minute. Then it falls like here. That is to say, there is still a comparison, and there is still a slight growth, but this growth is not enough to become a segment. It is insufficient. Its load is the width of the channel. How should we talk about this? The size of the channel, the width of the channel. You can see how it compares with the previous one. Is it very narrow? It is here that the channel is broken. Because this kind of channel was in my initial indicator, if I didn't give it more, later I found that if we didn't draw it, there would be no zero boundary point, so I later drew it all. Anyway, we need a zero boundary point. Then when this zero boundary point breaks through, we have a bottom in our hearts. If it can go up, if it can be strong, for example, it can be continued here. In fact, small orders can be done, which is small capital losses. Then we can see this zero position here. There is also a range of $67 here. Then you can see 618%. Then here, it can be anywhere from 50 to 618. Then it's time for us to look at the traffic conditions here. It's almost approaching. So why are we no longer doing long orders here? This position is definitely not going to be long orders. This position is also entering our 30 minutes. The 30-minute Shangjia trend channel is about to reach the position of 1901. It is now $5 short, right? $5 short, so we are also waiting to enter the mine here. Multiple orders are not recommended. And if this is not drawn, but we can feel it. This is all a small order, so let's go small and feel it by ourselves. We can also go back to the 5 minutes. If we can feel it, let's go to 1 minute. We have already drawn it in 1 minute. It can also be drawn in 1 minute, because 5 minutes basically enters a disordered barrier zone. And the 30 minutes we analyzed earlier are the same. It enters an N-type righteous pullback. If the pullback point is here, it is quite classic. There are quite a lot of N-types on the market, so there is a reason why they are talked about more today. We can simply go short in this section. There is nothing to say about shorting 618, right? This section is also below our 618 because its pullback is very simple. Then we also extend this section. As for the CPU data mentioned before, it is now no wave and no wave. A standard wave-free rebound, the rebound band, the rebound is quite a channel, and at the moment of the data, it is not quite a channel. There is no attenuation before the data to the moment of the data. Then I was also adding at that time because my orders were not based on the data. Then it is based on our pattern, so it was also in front of the data at that time. It is also a kind of left and right board. Here, if we want to have a short position, we will make a short position. If not, just wait and it will go up directly. There is no space at all when it goes up, that is to say, this trend channel is like this, and then it is stretched directly. Under this trend channel, it is equivalent to the gap here. There is a little times the space. The gap is the gap channel. You know, it is this, for example, this channel is like this. Like this channel is not good. Anyway, when the time comes, you can see that when there is no wave and the wave is extended, you will see the kind of vacancy. The extension position is very far, and then it is the trend channel with more vacancies in the direction of the trend. That is, this is the trend line, and then this is the other line of the channel. The other line will be, for example, here. This form means that it falls more. For example, the decline here accelerates and falls outside the screen, right? This channel is drawn like this. This means that there are more gaps in the east channel, that is, there are more gaps in the trend direction. Then here, we must have analyzed it at the time, and we will say more because it is legitimate. The more legitimate we say, the more we can say, because the more analysis there is.
Right, and then for example here, the same as here, then today.
Let's see if it's possible here. I've always thought of rehearsing on the short side, and then press the plate. In terms of subjective sound speed, I may not do it right. Then from the plate surface, the plate sound speed.
Then he walks a descending one.
We also need to introduce the descending one.
Then here, the direct loss is set. Anyway, the direct loss is our first element. Then everything is combined with the form. Let's do it based on our trend. Let's summarize it.
Today, because I may just be editing the market to share with you, then let's summarize it.
The summary is that our 30-minute channel is falling along the channel.
Then when he got to this position, he did not form a new main section here, which proved that his volatility was also within the normal range, but his backtest seemed to be slightly tangled. Then we still haven't seen obvious acceleration behavior, so there is still a legitimate behavior here. If our trend channel does not break, if this trend channel continues, we need to continue above this channel. Observe the situation and go short, because the closer you get to this main section, the more likely you are to reach this bottom, right? Then we have to be a little more cautious and look at the road conditions, because it does not have an obvious trend. It is just a continuation. The previous trend has continued with inertia.
Then we have a choice point here. We have now reached a choice point. This 618 we.
These positions are all for reference.
This position is a reference. He may be at this position. We need to take a look at his actual operation. We will move down based on his newly formed descending channel or according to the new structure. Go and do channel education, a 1-minute channel education. Sometimes everyone is like this.
That is to say, the second point of summary, which is also the second point of going long, is when should we go long?
It's 30 minutes. No matter where you go long, this is the case.
In 30 minutes, the trend channel must be broken first, and then the trend channel must stand firm. It is best that this point must also be broken through, but we don't have to force it. Whether this point breaks through, we need to first establish an ascending channel in 30 minutes. Here we can directly wait for the establishment of the ascending channel, because the ascending channel of this indicator will be formed. If it is formed, we will follow the ascending channel, such as 618 points, such as the trendline position. Then we will look at the traffic conditions and then investigate. At this time, our thinking will be completely converted into a long-term thinking. But it does not mean that longs will not go short, and shorts will not go long.
It all depends on the position. For example, here we are.
As for the short position is also at this position. If you want to go long, you don't have to do it, because going long is just a rebound, just a discard.
We can.
That is to say, if there is a regular opportunity or a regular position, you can give it a try. If you don't try, it doesn't matter if you do it or if you don't do it, right? It's all a sure thing. There is nothing that a stop loss can't solve.
That's it.
After talking for a long time, we talked about it anyway, and it was like this. The channel is connected to the channel to go short. The channel does not change, the direction does not change, and the channel changes. We have to change accordingly.
That's it.
Then all transactions are reflected here. Let's talk and talk, let's just do it anyway, it's useless to talk, right? Goodbye, today I love to go back and play by myself.